Joining us is TD Cowen's John Blackledge. He has a $225 price target buy rating on the stock. John, a lot for investors to like here in terms of the beat, 12.5% sales growth, reacceleration in AWS. Does it change your view on targets, profitability, and estimates from here?
No, we got what we were looking for. The two big bogeys going in were the AWS revenue growth and the operating income. And the AWS revenue growth, 17%, accelerated from 13% in 4Q. It was above the investor expectations of 15 to 16% growth, driven by kind of fading cost optimizations that had kind of hampered growth over the last year. And then you had ramp up in new workloads for Gen AI and non-Gen AI workloads. And they also called out multi-billion-dollar revenue run rate for Gen AI, which was positive, and investors didn't think they would give us that. And then the huge opportunity ahead. And then the op income was huge, over $15 billion, 21% above our street high number, 35% above consensus, driven by high margin AWS and advertising businesses. And then the rest of the biz kind of turned positive. So I think that's a big reason why the stock's up today, those two metrics.
Hey, John, they mentioned the CapEx for Q1, likely the low of the year. How high does that get? And how do you characterize it in light of what we heard from Microsoft and Alphabet and Meta on the same front?
Yeah, thanks. So 14 billion CapEx in 1Q, low watermark for the year. We went to 62 billion for the total company. That versus we had 54 billion going in. So it was like almost like a 15% raise. Within that, we had AWS CapEx of about $40 billion. It's up 60% year over year. As management called out, most of the acceleration is on the AWS side, building out for Gen AI infrastructure capacity, which is what we heard from Alphabet, Meta, and Microsoft. And they also called out, they are investing on the fulfillment side and like same day robotics, et cetera. But the one thing I would point out here, because Meta got this question on their call, and Alphabet did as well, is there going to be a payoff for investors at the end? And I think it's a yes. Like for just from last night, AWS posts a record 37% margin. So Amazon and AWS has proven like, hey, we're going to invest ahead of future needs, and then we'll show the margin, revenue and margin.
Speaking of margins, what are your estimates for combined margins? Obviously, you point out AWS, advertising, obviously a strong margin. Even the retail business had an actual margin. What are you targeting overall for the company?
Yeah, for this year, we have overall a 10% margin. We actually, like I was saying, we're street high for the year at 63 billion, and we went up to 67 billion in operating income, and they beat nicely in 1Q. And then the 2Q guide was above where we were at the high end. So we think it should be good. And again, that's driven by AWS, which was a massive beat. And then advertising, which the ad business grew 24% in the first quarter. That'll be a big driver of op income. And then kind of the rest of the business turning positive. And I would say the one thing that management called out a couple times was on kind of the e-commerce business and that margin, which people always kind of wonder about. They said they had several years in terms of lowering cost to serve on the fulfillment side, which is good. You got big gains last year when they went to the regional fulfillment model, but there's more to be done. So we have margins up this year and up kind of going forward.